Hi everyone, Jack here at Smart Money. I'm here to help you manage your money more effectively and also share my personal investing experiences with you. If you're new to the channel, please make sure you hit like and subscribe below, and also follow me on my social media channels at Smart Money Jack, where I post daily motivation and investing tips. So as you're here, I'm guessing you're looking into investing, or maybe you've come across the term LifeStrategy fund and wondering whether this is the correct option for you. Well, today I'm going to talk through the fundamentals and the basics of the LifeStrategy fund offered by Vanguard and why they could be a great option for both newbie and seasoned investors alike. If you've done any research at all into investing, I'm sure you'll have read that it's sensible to diversify your investments and not have all your eggs in one basket. For example, you wouldn't want to put your life savings in a single company stock, as if that company ever went bust, you'd be left with nothing. This is why the LifeStrategy fund is a simple approach that can help you diversify your portfolio. Personally, I'm a big fan of the Vanguard LifeStrategy funds, as they offer a simple one-stop shop to invest in. Vanguard choose all the investments and stocks that they're going to invest in for you, rebalance them and change them with the market, and they do this all for an incredibly low fee. The reason Vanguard are able to keep the fees on the LifeStrategy funds so low is partly down to Vanguard and the size of their organisation. They have over 30 million investors worldwide. Hence, when you've got that much reach, you can charge a relatively low fee and still be able to make the profits required. The other reason is because the LifeStrategy fund is known as a tracker fund or passively managed fund, which is where a computer tracks the market and makes the investments for you. This is opposed to an actively managed fund where a fund manager is in control of the investment decisions. Hence, they charge a larger fee for this service. There's arguments for both, but for this video we're concentrating on the LifeStrategy, so we're concentrating on the passively managed funds. Even with the exceptionally low fees I've just explained, of course there's always a way that you can do this cheaper. If you were to handpick all the investments made up in the LifeStrategy funds, you could be charged as little as 0.07%. However, the time and effort required to do this may outweigh the benefit of rather than just going with the LifeStrategy fund. However, this decision is totally up to you. Now let's head over to my screen and review the LifeStrategy range in a bit more detail and see what investments they're made up of. Now we're over on the screen, I want you to head over to the Vanguard website. You can either do this by typing Vanguard in your search engine, which is what I'm doing now, or you can go to www.vanguardinvestor.co.uk. Once the website loads, you'll come to this home screen. And then once you're on the home screen, I want you to head to what we offer and then click LifeStrategy funds, which is obviously what this video is targeting. Once you press this, it should bring you up a list of the different LifeStrategy funds that Vanguard offer. So it's just loading at the minute, sometimes it does take a few seconds. There we go, sorry about that. So as you can see, there's 5 different Vanguard funds that you can see there. There's the LifeStrategy 20, which is made up of 20% equity funds, which basically the equity fund means it's stocks and shares, and then the 80% is made up of bonds. Similarly, LifeStrategy 40 is made up of 40% stocks and shares, 60% bonds. LifeStrategy 60, 60% stocks and shares, 40% bonds. 80% stocks and shares, 20% bonds, and then finally the LifeStrategy 100 is made up of 100% stocks and shares. There's also the ongoing charge tab here that we spoke about previously. As you can see across the board, there's a minimal 0.22% fee on all these products, so same across the board. Then also there's this risk column here. These are scored from 0 to 7. So as you can see, the more bond heavy your portfolio is, the lower risk it's seen. So LifeStrategy 20 is at 3 risk, 40 and 60% is at 4 risk out of 7, and then the higher risk ones are the 80 and the 100% equity fund, which has scored 5 out of 7. Now these are still relatively low risk and very low risk compared to investing in individual company stocks. So what we're going to do, we're going to click on one of these and go into a bit more detail of how they're allocated. So for this example, I'm just going to pick the middle LifeStrategy fund, which is the 60% equity, which again is 60% invested in stocks and shares and 40% in bonds. So if you click on that, it'll bring me through to this screen where it gives you a bit of an overview. So as you scroll over the different tabs, it'll give you a bit of information on what this is. So you can see the NAV price there, scroll over that. This is the price of one share in the fund based on the value of its underlying investments. Asset allocation, 60% equity, 40% bonds, we've already touched on. Ongoing charge, we've already touched on, and also the risk. If we scroll down on this page, you can see the past performance of this fund. So you can see back between 2016 and 2017, this fund returned nearly 20% return on investment, which is amazing really. Over the years after, it dropped off in 2017-18 to 8%, which is still a healthy return. 18-19 didn't really perform well and it was down at 0.34%, but obviously it's still making you money. Last year we saw a bit of an increase again up to 12%, and then this most recent year it's dropped down to 6.62%. Here you can see a table based on past performance if you've invested a lump sum of £10,000. So if you invested £10,000 in January 2016, over the course of the years up until, this is the latest point at the minute, which is January 2021, that £10,000 would now be worth £15,470, which is pretty impressive for your money being sat there, you not having to do anything with it. There's nothing else particularly on that page. If we go into the price and performance tab, this shows you the prices and the historical price that the value of each share in this particular fund will be worth. Here's another bit of analysis, and you can see what it was worth only at the start of, 22nd of February 2021, it was valued at £213 a share. You can see there's been a bit of a dip on the 26th of Feb down to £210, but now we're back in March, it's recovered and it's back up where it was in the middle of Feb. Past performance, we've already run through that on the previous tab. This next tab will go into portfolio data, which shows you specifically how the money is allocated across the different funds. So as you can see, it's still quite heavily invested in bonds. This particular fund, 40% allocated to bonds. So you've got 19% in the global index the global bond index fund hedged account. And then there's various different funds this is allocated in all across the world. You've got US funds, UK funds, Japan funds, and then some global and specific ex-Japan funds. So that's the overview of the LifeStrategy 60. Let's go back and we'll take a look at one more. So the one we're going to look at next when it loads is the LifeStrategy 100, which is seen as the most risky of the LifeStrategy funds. There we go. So if we go into the LifeStrategy 100 equity fund there, so this is in 100% stocks and shares. Now, this is the fund that I actually invest in. The reason I invest in this one is because I see my investment as a long-term solution. I'm going to leave my money invested into this LifeStrategy fund and keep adding to it over a period of 10 plus years. So as it's more risky, there's more volatility within the prices. So you might see it spike one month and drop another month, but over the course of 10 years or so, you're definitely going to see some maximum growth really with this fund. So let's scroll down and look at the performance. So similarly, where we review this against the 60% fund, you can see that if you invested £10,000 back in February 2016, 5 years ago now, that would now be worth nearly £18,000. So you can see it's a significant growth even compared to the 60% fund. Obviously, there's been some rough patches along the way. There's certain dips back in December 2018. There's a serious dip at the start of March 2020 due to the coronavirus pandemic. But like I said, if you're in it for the long haul, it's not a risky fund to invest in, and you can see some very healthy returns. Now, I hope that was useful for you and you have a better understanding of the various Vanguard LifeStrategy products. If you're thinking this is for you and you want to start investing in it, I recommend you check out my other video on how to invest with Vanguard using a stocks and shares ISA. That's probably the perfect way to start investing in these LifeStrategy funds. I'll put the link in the bio below for you to check that out also. If you have any other questions or comments, please leave them in the comments section below the video and I'll look to get back to you all as soon as possible. Like I said, make sure you like and subscribe and look out for more content like this coming soon. Thank you.